Should tell us when we're live. Yeah. Awesome. Hello, everybody. Leticia here, coming to you today for another edition of my weekly Money Matters webinars. And today's topic, as I announced it a bit earlier today, is we're going to be doing a crypto market update. And I am joined today by our friend, Jerry Smith. Jerry has been is nice enough to do me a favor again and come in as our resident crypto expert. And I know he takes that title very lightly. This said, as you know, he doesn't like me calling him that, but Jerry has been actively investing in cryptocurrencies for the past 3 years plus. And he is, as I like to describe him, a crypto enthusiast. And you know, I'm really grateful that Jerry has agreed to join us today. It's been a few months since we last spoke, Jerry, and a lot has happened in the crypto market since then. So first of all, welcome everybody. I'm sorry we're a few minutes late. We had some technical difficulties, as luck would have it, just before going live, but thankfully everything's okay. So Jerry, what do you think would be a good place to start?
I started when I look back at the. I'll say hello first of all, and thanks for having a chat. I know that we can talk on this because it's a kind of a bottomless pit of newness. So you want to keep it going and keep it quick, and I can understand that. So I would just start where I kind of gathered my information. I thought of all the things I have, I want to start with the idea of not getting scammed. And when
fantastic.
you talked about a technical difficulty, it was me having, I think, a phishing scamming attack on my computer. And we were talking prior to this about some of the things I'm going to show, because I can't help but geek out a little bit. If I'm going to talk to people about crypto, I want to have a chart or two just to show, right? So
no, I'm happy for that. Thank you.
I was going to show a couple home pages of some alternative decentralized finance places, interest-bearing wallets, just different kind of out-of-the-box ways of kind of storing and earning interest, right?
That's amazing.
So I went to this one very popular website called Celsius Network. And I don't know if I had it typed in wrong or if they'd taken over it, but as soon as I typed in Celsius, boom, it went immediately to my Apple support page, and then it all got taken over.
Wow,
it was freaky. And then I tried to click on things. I couldn't click on things. I shut my computer down. So there are people, and it was one of those things where you've gone to a terrible place or something, your IP's something or other, call this number, right? It's one of those.
Wow.
And they'd say, we'll unlock your computer for $1,000 or whatever this
is, right? Yeah.
Now, the thing is, I think they did it because they were targeting people going to Celsius. Now, Celsius is a new, relatively new platform for crypto investing and earning interest on crypto. Where I was going to start my presentation was on something I had got for the last presentation, which was just a sample slide of an internet scam. And
sure.
I'll tell you, you don't have to be in crypto longer than 5 minutes before someone's trying to scam you. So
out of your crypto.
I want to preface our conversation.
Yeah.
Pardon?
Yeah, I said they're trying to scam you out of your cryptos or out of your dollars. There are scams that are targeting especially newbies to this world, which there's a lot of us, because the crypto world is still an unknown for many people, and that's part of the reason we're having this conversation, because I want to make it more of a known, and I'm really grateful you're helping us, Jerry. So if you want to start, I know you had a number of slides prepared. Now, Jerry has been our guest before, speaking about cryptos, and I think other than talking about the scams and how to avoid them, he wants to talk about the whys of crypto. Why are we even looking at this right now at this point in time? So I think I'll give you the control, Jerry, and then feel free to share your slides. Okay, thank you so much. Okay, all right, go ahead. And everyone, if you have any questions, please feel free to put them in the comments section, and we'll do our best to address them as we go along. Thanks everyone for watching.
because I had that crash that I didn't expect. I'm sorry, but I have to open the presentation again.
Yeah, please, you're fine. That is so freaky that it would happen just as you were about to go live with me.
Well, and it really is, well, it's almost, intuitive in as much as it is where I wanted to begin the presentation regardless.
I know.
Uh,
While Jerry is looking for his slides, everyone, I just want to mention this will be the last session of Money Matters for this year. Holidays are coming. Next week is Christmas Eve. The following week is New Year's Eve. So I'm gonna take it easy for the next couple of weeks, but I look forward to seeing you all again starting on January 7th. And I'll be still doing some of my personal vlogs and stuff like that. But in terms of the Money Matters, again, grateful that Jerry could be our last guest for the year. All right.
Sorry, this is took a while to get here, but sorry.
No.
Now, I'm going to go relatively quick through the first several slides. And this is just an example, like I said, of where I wanted to begin regardless. It shows a relatively sophisticated scam to try to get your money or to try to get your crypto or send crypto here or do this. Just stick with your hard wallet, learn about wallets, learn about exchanges. Just, if you're starting, buy it, put it in your wallet, hold it. Don't send it anywhere, don't get scammed, right?
Yeah.
So as, just to preface this, I want to talk through the first, 5 or 6 or whatever slides relatively quickly. I've gone over them in our first presentation or our first discussion that we had. And if it seems like it's too quick for anybody, they can always pause and look at the slide, right?
Yeah.
So to begin, digital assets, we've heard of Bitcoin. It's been kind of the, this rebel thing, this internet money for so long, and it's Silk Road kind of drug dealer stuff. But it's become a lot more than internet money, under the table type money. It's become a full-fledged accepted asset. As I get a little deeper in some of these slides, you'll see, banks, institutions, everybody's coming on board. It's not just so that much as Bitcoin, as the blockchain it's built on. The world is going to run on it. Cryptocurrencies are as legit an asset as stocks, bonds, multifamily real estate. Like the whole idea of an investment is completely broadened when you include digital assets to the party, because it's brand new. There just has not been. I think the last asset class to be introduced was government bonds. When governments needed to raise money, maybe we can sell bonds. So, like I said, I'm going to go relatively quickly through this. People should start with the Bitcoin white paper. Just go on to DuckDuckGo, search Bitcoin white paper. It'll take you to this document, and spend a half an hour reading it. If you get bogged down in something that seems too technical, come back to it in 5 minutes, read it again. It'll help you understand why it exists, what kind of pain points it solves, why it's better than fiat money, why you won't need a bank anymore, that kind of thing.
Amazing.
Speaking of banks, and speaking of Bitcoin, we get to a place where, we're making a decision about, I already called Bitcoin internet money. I won't do it anymore, but for the purpose of this example, internet money in your bank money, fiat money. Why is one better than the other? Well, the banks are starting to throw around some pretty big numbers lately, and the Federal Reserves are throwing around really big numbers. And it's easy for us to hear $1 trillion and not understand it. We just started listening and hearing billions of dollars kind of in the nomenclature, and now it's trillions. So this is a neat example that, just to give people perspective, in seconds, from 11.5 days to count 1 million seconds to almost 32 years to count 1 billion, right? Now, I heard the other day Jeff Bezos' net worth went up $50 billion since the start of the pandemic. Now, this is seconds, and it's 31 years.
Yeah, we're talking about orders of magnitude
Good
greater.
grief, right? And so all I'm saying is they're throwing around trillions, and
Trillion,
trillion is a
sure.
lot, right?
Right, and trillions in relief packages. And then what that means, Jerry, and the reason you're mentioning this is because essentially what's happening is a lot of money supply is being added to the economy, to the world economies, and all these relief packages that are being essentially issued by government. Well, it's the central banks that are helping governments fund these trillion-dollar, like multi-trillion-dollar relief packages, and tell people what you just shared a bit earlier in our conversation, which was that about how much extra money supply has been added to the economy in the past.
Well,
You know?
and that's like I'm not enough of an economist or a financial advisor or anything to know, to say that
The
it's
exact
going
amount.
to the economy per se,
Okay.
because these trillions of dollars, where this slide, for instance, when they start throwing money into repo markets and pumping up this bank or that bank, or just dumping it into, like when they dump it into like when they say dump money in, I don't think it means they're shopping on Main Street, like that kind of dumping money in. And it's certainly not going into pockets of you and I, but somehow
Right.
it's the money is being generated and put out there, to stop a flood of it going out the door, right? It's like paying bad interest or something. This money is being pumped in to stop it from collapsing, not to generate anything.
That's right.
Say, right.
That's right.
Well,
There's no value being
there is stimulus money going in.
created. There's no value being created. They're simply printing more money without there being value created. Therefore, what's going to happen is there's definitely going to be an impact on the value of our dollars. The more you add to the economy, and then I know you have some additional slides on that, and then we're going to talk about where Bitcoin comes in, where cryptos can come in. Sorry, okay, right. Okay. And that was Federal Reserve admits it pumped more than 6 trillion to Wall Street in recent 6-week period. So 6 trillion in a 6-week period.
Yeah. Now, when all of this money's being printed and made, and they say that 20% of all the money that's ever been generated in the U.S. economy has been printed since this pandemic. That's 20%, right? So one in every $5 has been printed since this has come into existence. So just imagine how valuable a Picasso would be if everybody in the street had one, right? You can't dilute an asset and have it still retain its value. These are some pretty crazy prices, but the bottom line is why buy crypto when we can just put our money in the bank, right? Why is it the responsible thing to buy crypto versus putting our money in the bank? And I'll argue in the next couple of minutes that the prices of goods don't go up. It's the purchasing power of our dollar that goes down. And it goes down because out of nowhere, somebody just doubled the amount of them.
Right. Yeah.
So it still says a 1 on it, or a 5 or a 10 or whatever it is. But since out of nowhere, there's instantly twice as many of them, it just doesn't have the value it used to have, right?
Yeah.
So you can look at what $20 buys over the years, and it goes down. That's an inflationary, it's just an inflationary part of the way that the money's been designed. But it doesn't have to be designed that way. If there's a limited supply of an asset, then over time, with its popularity and adoption, the price should go up. Like that's how rarity and scarcity works, right? So I think when people are talking about why should we consider a crypto market for investing versus investing with our dollars, and to me, whether it's in a bank account or it's in a mutual fund, it's still a dollar.
Yeah.
right? And that dollar is losing its purchasing power. Or whether it's in, like, as far as I'm concerned at this point in time, even if it's in real estate, it's still a dollar. I want my dollar out of anything that's valued in dollars, and I want it into something that's not, becoming more and more eroded, right?
Interesting.
Bitcoin, because there's only ever going to be a limited amount of Bitcoin, and there's more, like I think I heard the other day that there's 40 million millionaires on the planet.
Okay.
There's only ever going to be 21 million Bitcoin printed, right? And because of loss or whatever, there's going to be less than that. So there's going to be a lot of wealthy people able to buy Bitcoin that won't be able to buy a whole Bitcoin, right?
Right.
So,
yeah.
So they'll end up buying a half a Bitcoin, but in the rush to buy a Bitcoin as an investment, it will force the price up because it'll become scarcer and scarcer with more and more people wanting to buy it, right?
And I think that's part of what we're already seeing happening, in the past, few months, literally. But we'll comment on that. I'll have your comments on that in a little bit. Now, you made a comment about things that are valued in dollars, and I'm always wondering, because I think many of us are suspecting, and we knew that when the first U.S. COVID bill was introduced, they were going to introduce a digital dollar, and I think it's beyond suspicion that, that the central banks are going to issue, I think it's part of their plan, they're going to issue these digital dollars, these cryptos that are central bank issued. Therefore, can we expect that, and again, I know this is just speculation at this point, but what we're seeing, we're seeing the fiat currencies, as they're called, becoming less and less, like more and more worthless, we should say, with all this increasing money printing that's going on. So, they keep talking about the Great Reset. We've all heard their terminology, and my suspicion, and I think a lot of people are coming to the conclusion that they're going to just basically get rid of these fiat currency. They're going to introduce maybe a digital dollar of some kind, and then the price, the value of all the goods, whether it's property, whether it's your stock portfolio, is it foreseeable that it would now be measured according to these new digital central bank issued digital currencies? Do you think that's what's likely to happen? I know it's a loaded question.
It's a question that I'll answer in a couple of different steps.
Okay.
A digital currency is different than using your Venmo account right now or making an e-transfer in your bank. Just because you use your computer doesn't mean that what you're doing now is digital money, right?
Yes.
I can send you an email of a movie and attach a movie to it, right? And that movie can have sound and it can, like, and I can attach that to an email, but I can't send you $5, right? And with a digital asset, I can send you $5. I can send you something that you can put in your phone wallet, you can see it recorded, and you can purchase something immediately with that thing that I've given you, because that thing I've given you has value. Mm-hmm. And the simplest way to put it is digital assets like Bitcoin turn the internet on its head. Up until Bitcoin was invented, the internet was an internet of information, right? And the example of the email I just gave you is exactly it. Imagine all the information in that email. I can send a note in the email with the attachment. I can send a movie. I can send so many things, but it's all information. You can argue that the information is valuable, but you can't send me a concrete asset in an email.
Okay.
When Bitcoin was created, it turned the internet of information into the internet of value, because I am now able to email something of value, a digital asset, right? And that's like right now your bank you can predetermine email transfer recipients or e-transfer recipients,
Yeah.
whether it's your hydro or your landlady, right? But that's not sending them digital payments. All that's sending them is a notation on a ledger for the bank later on to make that, to settle that transaction. So the bank has that predetermined in kind of a closed circuit, right? So when you make the arrangement through your email to send your landlady money, notice you're not sending her money. All you're sending her is an email that gives her a link to go to her bank, right?
Okay,
So,
I get that. And I get the difference, Jerry,
right.
and you've explained this to
Right,
me
okay.
before.
So it's inevitable, because we're in 2020, that we're going to move into an internet of value where money and value can be emailed and sent digitally, right? So you should want the money that's in your bank account. You should be able to want to send that to somebody
directly,
and somebody $5, right? So it's inevitable that Canada and all the countries are going to make, they're called CBDCs. They're central bank digital currencies, and they will happen, right? There are nefarious aspects to all kinds of control like that. I saw somebody do a video the other day where they intentionally jaywalked across the street. And when they got to the other side, he pointed up and said, "See that digital camera? That digital camera has facial recognition. See my phone? They're tracing me on my phone. If once our money goes, digital, blah, blah, blah," he says, the government will be able to go into my wallet, take out the fine for jaywalking, and there's nothing I can do about it, right? Now, whether that's true or not, it's certainly, a pretty scary picture of the direction that digital assets and our governments are going to go, right?
It is. And I would sure hope there would be some safeguards. But that being said, even, so my question was whether you think that all these paper assets, as we're called, stocks, mutual funds, insurance policies, once we're no longer on the current dollars, do you think they're essentially going to issue a digital dollar equivalent for the value?
That's already happening. That's beginning to happen now.
Oh, really? How so, if I may ask?
Do you know the value of an Amazon stock right now?
I don't.
Well, it's a lot of dough. If you're going to go on to the stock exchange, I can find out quick, but it doesn't matter. Say it's $1,000. If you're going to go on the stock exchange, you can't buy a quarter of an Amazon stock.
No.
Right. Bitcoin is at its all-time. I don't know what it is in Canadian money, but it's like 23 grand or whatever in American money. The last time I looked, I could buy a tenth of a Bitcoin if I wanted to. People that aren't in the space think they need to buy a whole Bitcoin, but you don't.
That's right, and that's a common misconception. You do not need to buy a whole Bitcoin, so don't be intimidated that when you hear that Bitcoin is at 23,000. Oh, I'm priced out. No, you literally can buy a tiny amount of Bitcoin. Yeah, go ahead.
To be fair, in most other asset classes, that's not the case though, right? Like I just said, you can't go on the TSX and buy a quarter Amazon stock.
Interesting. Okay.
Right? But there are places where that Amazon stock is represented in crypto. It might be like a AMZX or something.
Okay.
And through that, you can buy a quarter of an Amazon stock. Right?
Really?
There's something that's called wrapping. That's what anybody that's in crypto will know Flare is about. There was just a big airdrop of Flare tokens to whoever owned a certain other token. And basically, it's a wrapping exercise to take something that is crypto-like and be able to bring in other things to it, right? So stocks, derivatives, real estate, fine art, anything can be digitized. Whether it's, say it's a self-driving taxi service, you could have 50 people that own it, and it's all, you know, it all operates digitally and automatically, and you know, it's definitely a new paradigm.
I don't think I quite got what this Flare thing is about, or this
Yeah,
wrapping.
just imagine everything that exists now in price evaluation, like you said, in our current fiat,
Mhm.
it will become a blockchain digitized entity before too long, right? The world,
Okay.
and you know, it was said somewhere that the blockchain is the biggest invention since calculus, right?
Okay.
And I think the person who said that was just trying to impart what a big impact it's going to have, right? So the blockchain is the kind of thing that, you know, without being too dramatic about it, like the world may find itself running on, right? And
Okay.
and when that happens, things will all become digitized. Banks, when you start to see how Celsius works, how BitFi works, how so many of these other decentralized financial institutions work, when
Interesting.
you start to understand that you can buy Bitcoin and different crypto assets through PayPal, you can send
Yeah,
them
maybe we can talk about
MoneyGram.
that.
You know, banks are buying crypto exchanges, and crypto exchanges are trying to become banks, right? I think
Interesting.
our notion of what the heck that big stone building on the corner ever did for us is going to go out the window, and we're going to realize pretty quick they've just been fleecing us, right? Like
Oh, we're talking
why am
about
I being
banks.
charged?
Yeah.
Why am I being charged 10 or 15 bucks a month, whatever it is?
Yeah,
Some
just to keep my money. Yeah.
You know, I've got wallets on my phone that are 50 times more efficient than my checking account ever is, right? Like, and the
Interesting.
history that it provides, like everything, right? So, you know, I think banks and banking as a, you know, like it's being it's being
Replaced. It's becoming almost obsolete, or that's in the process of becoming obsolete. Our current way of banking, right? From what I'm
yeah,
gathering.
you know, like when I'm not that heavily in the know about what's going on in the DeFi space, but in crypto, there's something that's called yield farming. There's, you know, as a way of earning dividends on your crypto, where you can lend out your crypto to other people over a 30-month or 30-day period, a month period, and then for a certain rate. And then depending on the price up or down, you're either going to get a lot coming back or a little. You can stake your crypto and get a high return, like a high investment on it. Like you stake it and you lock it up at a certain place. For like I've got some Ethereum, for instance, locked up for 30 days, and I'm getting 11% on it by locking
Here,
it up.
everyone, just it's like a savings account, but for your Ethereum, and you're getting 11% just for keeping it there. It's almost like a 30-day GIC, but you're getting 11% on your money, not below.
Right. Now that's APR, right? So
APR, sorry, what does that mean?
well, it's annual percentage rate, right? So that's annualized.
But
But
that's still better than what people are getting in their GACs, my dear. Like, I mean, all you're doing is you're parking it there and you're getting those kinds of rates of return. Now, what happens now? You're parking it there. Now, if Ethereum, the value of Ethereum, because of other market factors, goes up during that time, does it still go up, or are you only getting the 11%? Pardon my ignorance, but I'm just curious about that.
Well, the interest is paid daily. So as it goes up, like I can and that's what I say about the efficiency of these kind of wallets versus my bank. I'm in a place where it's on an exchange actually, and I can go under records under my lockup agreement, and I can see every day that, like, I don't know, I think I make $4 a day or something on it, right? It's a, you know, but
you didn't put a lot of it in there.
I don't know if it's that much. Maybe it's $3. But the thing is, it's every day I can see how much I'm getting, right? Like that's how efficient this kind of thing is.
Do you want to share with us which exchange that was, or?
Well, it's on Bitrue. which is an exchange that has
True. What's it called?
Bitrue. It's BITRUE.
Bitrue. Okay.
Bitrue.
Is that a Canadian exchange or?
I don't know where they are.
Okay. It's okay.
I don't know where they are. I'm involved in. I'm on a lot of exchanges, but Bitrue has some things. One is called a Power Piggy, which isn't what I just described, but but you can freeze. You can, like, whatever accounts you hold on there, you can freeze it, and it just stays frozen, and you get a higher percent. You earn a percentage rate on it. You can hold money just like in your wallet, or you can put it in here, freeze it, and you'll get a percentage return.
Okay.
But if you, like I said with my Ethereum, I locked it up. I have to, like, I can unfreeze this other stuff at any time, but the Ethereum, like you said, it's like a GIC, so I can't touch it, right?
I see, but the value of that Ethereum, the market value, it could have gone up in the meantime. So that's what I'm asking. Like, are you?
But not when I get paid interest every day, because as the value goes up, I'm getting a percentage of what I have, right?
Okay. What if the value goes down? What happens then? You're still getting the
percentage
same percentage?
is percentage, right? If I'm
okay.
It's it's a percentage interest rate.
Yeah. So whoever runs that exchange, they're taking the chance that if Ethereum goes down, I mean, they're still on the hook for the interest. And the interest is paid to you also in Ethereum, I would assume. Or
yes.
Interesting. Okay.
But in my Celsius wallet, which also pays interest, I can choose whether I want the interest paid in the particular token, or if I want the interest paid in a Celsius token, which gives you other benefits on their platform, right?
Got it. Interesting.
But from a financial earning perspective, holding perspective, as far as crypto goes, there used to be an expression, and there still is, if you don't hold the keys, you don't own the crypto.
Okay.
Now, when you get into crypto and you get a hard wallet, you'll learn that part of establishing that wallet is your private key, right? Which you don't. I can show the world my Bitcoin address, but I wouldn't show anybody the private key for that address, right?
Got it. Yeah.
But nowadays there's just a lot of. I think there's a lot more infrastructure that it's a little bit safer to hold some, like, I wouldn't put all for sure, but I'm more apt to hold some money or some crypto somewhere than I was a year ago.
Like such as on an exchange, for example.
On an exchange or in the Celsius wallet, that kind of thing.
Okay. The Celsius wallet is not a hard wallet, or it is?
It's not a hard wallet. It's an online institution.
Okay.
They've been going for a couple of years, but only live, I think, for a year or so, not very long. And they have $3.25 billion under asset.
Got it.
Are under management, and they've just recently been audited. So every single transaction, and they came up 100%, like they got a pretty clean bill of health. So as far as a legit institution, and plus this Alex Mashinsky guy has a history of really being on the side of people, and just
Alex is the creator of this platform of Celsius.
Of the Celsius platform.
And he also told me that he was the inventor of the VoIP protocol, right? Voice over IP, which we all, so many of us benefit from. And so what else? Free Wi-Fi on New York subways. That was also him. Yeah.
So he's all about sharing the wealth. He's. I'm not sure he's made quite a fortune already with this Celsius venture, but his notion of keeping the majority of the profits just isn't, like, he's so much is kicked back to the community that it's catching on like wildfire.
That's amazing. Cool. Yeah, thanks for sharing all that, Jerry. I mean, you've touched on a number of new things, such as the Celsius thing, and everyone watching, if you're hearing some terms that you may not be familiar with, I will put the links in the comment section to the previous sessions we did with Jerry. And for one of the sessions, I was also joined by our friend Mike, talking about, first of all, the why of crypto, and then also some practical steps on how to get started, including learning, really getting on an exchange, or literally buying Bitcoin at a Bitcoin ATM, which is still a possibility, as ways to get started. In the interest of time, yes, I would love it if we could keep going, Jerry, because I know you love this. And listen, listening to you, I could also keep going, but I know people are not going to sit and listen for 2 hours potentially. So we'll just continue. Thank you.
Yeah, like these couple of slides I'm toggling between tell a little bit about Bitcoin, but like I said at the beginning, someone can always just freeze the camera and kind of check it out. Our dollar has 2 decimal places. A Bitcoin has 8. Imagine the price that somebody at one point expected Bitcoin must get to in order to warrant it being divided that many times and still be meaningful, right? Bitcoin is created. Every 10 minutes, there's a bunch of them created. Every 4 years, that bunch gets halved, right? That bunch is called a reward. People do a calculation, they get rewarded. Bitcoin are created every 4 years, half as many. So the way that it's been designed builds in that scarcity we talked about before, right? And when you start earning less and less, then that's more and more scarce, and the price must have to go up.
Yeah.
Just by virtue of that.
And that's just how the whole Bitcoin algorithm or creation has been designed. And again, it gets created by these so-called Bitcoin miners that we're talking about powerful computer systems at this point in time, and it's becoming more and more expensive to even create the new Bitcoin, new Bitcoin, right? So not everybody, it used to be that people could just do it from their own PC. That's not a possibility really right now, based on, like, you need a lot of computer power to even be able to generate new Bitcoin. So again, that just makes it basically more expensive from what I gather. And yeah, tell us what this chart
Just very quickly, and again, people can pause it. I'll go through it very quick, but it's the life of Bitcoin in 4-year columns. The pink is the first 4 years, the blue is the next 4 years, and the green, which we're further along now, we're almost at the very end of the green now, is the previous 4 years from now. Now this map ends with Bitcoin being just under that $10,000 bar. Well, we're 23,000 today, so that has done nothing but go up. And as is the case throughout this chart, which we got to assume is going to continue. It doesn't make any sense that it's going to go down all of a sudden, but Bitcoin is on pace to be somewhere around $100,000 over the next 4 years, or more, right? Maybe I should put my glasses on, but it'll be on its way to 1 million before we know it, right? So this is what am I doing here? Am I still going here?
Yeah.
So this is it's funny because I can't see my mouse when I get on this. Okay.
I don't have a Mac. I don't know, Jerry.
Well, no, my mouse just is this very quickly. Can you see the whole of these 2 charts?
Yeah.
The top one, and you can kind of just draw a line straight down. The top one is one we met before, and it ends. There's a dip, and it kind of comes up from the dip and straightens out. That's where it ends. If you go kind of straight down to this one I took from today. So from July, you can see where we stopped in July. That's where we were. Pick it up from the bottom, and you can see we've done nothing but go up. And earlier today, we were 23,002, right? So when you talk about, these things like market cycles, where we were, if you look at where that red bar goes down, just before the green started to go up,
we're now in the euphoria or the thrill stage of the market from what I can see there. Optimism, belief, thrill. We're almost hitting euphoria, but I mean, But you just said, and I know you're not the only person who has expressed this, Jerry, that Bitcoin just by its design, it's expected to continue going up in value. So even though we've hit an all-time high, and you said to me earlier, well, you know, you don't want to buy at the peak of the market. So, you know, I'm guessing what you expect is going to happen is that there's going to be some sort of a correction before the next peak. Is that? But we don't know when this peak is going to end.
Exactly. You know, like where you're looking at now, like you saw the psychology over here on the left, and we may still be, you know, just past the hope stage, right? Like I don't know if we're even at the optimism right now, because
people are still skeptical.
Like we passed the all-time high, but this stuff that's going to happen here, that's when, like, I know the other day Bitcoin gained like $2,000 in a day, or a little bit more. But when it gains 5 or 10, or maybe 20, you know, that's when you get into the disbelief, right? Everything we've seen so far, we can believe because we've been here before.
Okay.
This is the 20th. Well, you know, I think the last high was 19 something.
Close to 20. Yeah.
Disbelief truly is disbelief. Like when
people just get freaked out, basically. They're like, oh my God, this can't be sustainable. I'm going to pull my money out. Is that what we can see? Yeah.
You know, and it could be, how could this be possible? How could my, well, so many coins in this last little run up, I've had 2 or 3 of the coins that I hold double in price, right? So, and that's just in the last month. So have you heard anything on the news about a market doubling in price?
Nope.
Nope. You know,
and it's still, it's fascinating to me, Jerry, how you don't hear, I mean, first of all, the news, they have their one favorite topic that they talk about ad nauseum, as if there's nothing else going on in the world. But in the meantime, this has been going on, right?
Yeah.
And now I know you mentioned, you know, gold has also been going up as far as I know, but we're not talking about gold today. You know, I don't know.
Yeah, like, it's funny. People talk about Bitcoin and gold being correlated because Bitcoin is like the digital gold, or so people say,
it's
right?
Being seen as a store of value,
more so than it's a functioning currency, right?
Currently,
and it's funny that both of these assets are at their all-time highs.
Got it. Okay, so Jerry, you know what? Do you have a few more, because we're coming close to 5 p.m. I wanted to just ask you, right? So people, there are still people out there who again, we as mentioned, because Bitcoin is at its all-time high, people may think, well, maybe I've missed my chance already. I should have bought 5 years ago. And my friends who are real estate investors, you know, there's a saying in real estate investing, so, you know, the best time to buy real estate was yesterday or 10 years ago. The next best time is now.
Yeah. So
as long as, you know, and these are people who are not speculators. These are people who invest in real estate with the purpose of actually for rental purposes. They're not just, these are people primarily who are buy and hold investors, and they use the real estate to generate cash. The same cannot really be said about Bitcoin though, because currently, well, you did explain that there are basically exchanges or wallets where you can earn money by even holding your cryptos there, right?
There are also institutions where you can get loans based and use your crypto as collateral.
Right, I have heard about that.
If I needed to buy a car in Canadian money, I could put my Litecoin up in Celsius and get a loan from them. I think their interest rates are 1%.
Wow, okay. Interesting, very interesting.
So things are certainly changing there too.
So there may be a way to essentially generate some cash, because, you know, when it comes to gold, for example, gold has been seen, and it's been seen as a store of value. It's not putting any cash flow in your pocket, but it's hedging against what's happening in the fiat currencies markets right now. People are like, well, at least gold holds its value, right? That's the argument. I'm kind of thinking out loud here, and I hear what you said. So there are some ways in which you can start generating literal income using your cryptos, correct?
That's the thing, the difference perhaps with crypto, even when it is going up like it is now. Ideally, there's things that that you'd want to, or there's times you'd want to be buying, and it's not when there's big green candles going up. But if you have a plan, no matter what the asset, people, stocks and bonds, they want a dollar cost average. So the first Monday of every month, they put in $200.
Whatever it is, yeah.
And it's over time, whether the asset is going up or down, doesn't matter, because they've dollar cost averaged, and that's probably the most, prudent advice I could give to anybody getting into any asset. But the truth is, you can't really do that with real estate. You can't really do that with fine art. You can't really do that but with crypto you can.
You could, absolutely.
So even if it's going up, if say you got $1,000, buy Bitcoin, buy Litecoin, buy Ethereum, buy XRP, look at.
He's just giving you some examples, guys. This is not.
Those are examples. It's not financial advice. But
yeah.
What I was about to follow that up with is buy anything in the top 10 or 20.
Okay.
If you're wanting to get into the marketplace, right? It's safe to say, I don't know if I've got it written down, but people can write it down. Livecoinwatch.com is a live site where you get a list of all the cryptos, what they're doing over a 1 day period, a 7 day period, a week or a month, whatever. So look at anything in the top 10 as something that probably in the next year isn't going to lose you money, right? And if you have $1,000 and you split it up over 10 different coins in the top 10, or 2 different coins, or 3, you not only dollar cost average your buys over time, but you're
diversifying. You're spreading your risk a little bit. Yeah, fair enough, Jerry.
There should be enough signs when it gets to the top, if you're paying attention, to sell when you need to sell, right? If what you want to do is make money,
time the market,
double your money or triple it or whatever you should. It's up to you to know when to sell and when to get out.
Fair enough.
Now is a decent time to be getting in versus, a year from now.
Yeah.
Last year would have been better. It's like you said, right?
Got it. Yeah. And another thing real estate investor likes to say is, it's not about timing the market, it's about time in the market. So the longer you hold on to something, again, you're benefiting from what's known as dollar cost averaging, which is, that compound interest that you're earning while you're making your even little deposits throughout the year, as opposed to doing just a large lump sum deposit once a year, and then you've just missed out on all that interest that you could have earned throughout the year. So what you're saying is, it wouldn't be a bad idea for people to start even with small amounts on a monthly basis. Maybe make it a target, put $100, $200, whatever your comfort level is. Something is better than nothing. And again, don't be intimidated when you hear 23,000, because you could buy a tiny portion of a Bitcoin, and again,
$25.
Literally, you could buy $25 worth of Bitcoin. You could, and if you have questions about how to get in, I'm gonna post a link below to the previous video that Jerry and I did, which is literally practical advice. This is how you sign up for an exchange. And Jerry was recommending a particular Canadian exchange at the time, but there are many other exchanges. And we're actually going to post, when you actually sign up on the exchange, you get a referral link, so you can refer your friends, and then you can earn some extra tokens if they sign up. It's a win-win for everybody. Oh yeah, there you go. Okay.
I didn't send you my links. The top 3 are the home pages of 3 different Canadian exchanges. BitBuy, which I've used. The one in the middle, Coinberry, I think I've signed up for, but I haven't used. And Coinfield. There's more. There's another Canadian exchange called GDAX. I haven't used them before, but then underneath that, you see Crypto for the People. It's PayPal. PayPal is offering an on-ramp, which is a way to buy crypto, right? I don't know how they maybe that you have a crypto wallet in your PayPal account. I don't use PayPal, so I don't know anything about it.
But they're wanting to make it because, sorry, because they are such a popular platform that people are comfortable with already. So many people are comfortable with. They're like, well, we're going to make it easy for you to buy cryptos. Basically, is that what's happening, Jerry?
I think it's inevitable. The same thing I said about it's inevitable for countries to get into the digital asset space. It's in it, like that's just the way money is going. So PayPal, MoneyGram was the first. They partnered with a company called Ripple. They make XRP token. They partnered with them last year, and just look at MoneyGram stock. It's gone. It's done okay.
Okay.
So the world is just moving in that direction. This is the beginning. Beside PayPal here, there's Fidelity Assets. Everybody knows about Fidelity, right?
Yeah.
As far as investing goes, they have an asset division, and I just heard the other day that I think they're adding 100 people to it. Like it's growing rapidly.
Wow. This digital assets division, a digital asset.
Of Fidelity Digital Assets, yeah. And then this Grayscale company is another company that's offering basically crypto funds, and Bitcoin Trust. The Grayscale Bitcoin Trust is quite a big thing. So where to buy crypto, where to be able to send it is just the beginning. I have some slides in here about what's happening across the board. And eventually it'll get back to the PayPal thing, but check out some of these headlines. I'll just go left to right. Square, which we know the company Square, right? That's that communist that owns Twitter.
Isn't that the payment processing company?
Yeah, the same communist that owns Twitter owns Square.
Oh, sorry. Yeah.
Anyway,
Gary feels the same way I do.
Pardon? Yeah. Anyway, he just bought $50 million in Bitcoin, right? Guggenheim Partners invest $500 million in Bitcoin. PayPal gets into crypto, new features, blah, blah, blah. Asset manager Roofer confirms $750 million Bitcoin investment. SBI, which is a huge bank in Japan, one of the biggest banks in the world, is buying a full-fledged digital asset trading desk. So we've seen, and then MicroStrategy, this was in the news last week or 2 weeks ago, just dropped $650 million on Bitcoin, right? So what's interesting, this MicroStrategy company, what did I do?
Escape. No, you just have a blank slide there for some reason, Jerry. Just roll over it. I see you have a blank slide. You're going to talk about next one, next slide. Okay, and then you have a blank slide in your deck of. Yeah, that's just a blank slide.
That's where I was going to put. I think that's maybe where I was going to put the Celsius thing when that other thing.
Oh, so, no worries.
But
no worries.
This MicroStrategy, or one of these, a couple of months ago, back in July, when Bitcoin was $10,000, they spent $400 million on Bitcoin. Now, the price of Bitcoin's doubled, and they're sitting on over $700 million. Like, it's just been a crazy investment for the company, right? So wow. This is a sign.
Yeah. In other words, it's more than doubled, and they bought at the right time.
Right.
And we're talking,
now, what they're trying to do, and these are people with a lot of money. So, when I see people, I don't know if I should put a whole $1,000 into Bitcoin. Get over yourself. What are you talking about? These people are dropping the farm on Bitcoin because they recognize what's been happening to the money supply.
Yeah.
Fiat money is being so diluted, it's meaningless, right? They don't even give any interest on it. You can borrow it for free. It has, it's meaningless, right? So what people are doing, think about that shopping basket thing or the shopping cart thing where every year you can buy less and less and less with your shopping basket. These people are preserving their capital. They have $750 million. They don't want it to be worth $500 million next year, right?
Wow.
So they're taking their money now and they're dropping it into an asset that has a finite supply.
Got it. Got it.
And, you know, just think like, it's basic responsible management of your money,
Yeah.
right? And
Yeah.
more, and like I said earlier, I forget if it was during this call or before, but there's 40 million millionaires in the world,
Mhm.
21 million Bitcoin.
Mhm.
Who knows how many companies there are, not to mention countries, that want to preserve their wealth, their money. Think of all the countries that buy gold. They don't want to buy gold because they're in the bracelet making business. They want to buy gold because it maintains purchasing power and it maintains its value over time, right? It doesn't depreciate, or it hasn't typically. So a lot of people are going to be running into Bitcoin as a finite asset to protect their wealth, right? This is a story that I love. I'm going to go over it really quickly. It's the pizza story. We all know it. But back in 2010, 2 years after Bitcoin was created, remember I showed that chart of Bitcoin? It took 4 years from it to go from $0 to $10. So 2 years after it was created, it was still pretty worthless. This guy sends an email out offering to pay somebody 10,000 Bitcoin for 2 pizza. Right? So he did it. It happened. That was in 2010. If you took those 10,000 pizzas today, and I did the math, you're looking at more than $250 million.
Crazy. And this was only in 2010. We're talking literally 10 years ago. 10 years ago.
Okay, now, Letitia.
Mind blowing.
Check this out. This little chart on the side is Digibyte.
Okay, yeah.
Digibyte is a digital currency. It's not in the top 10. It's not even in the top 20. I think it might be around 60 in the top 100.
Okay, but I've heard of it and I'm totally new to this world, yeah.
And Digibyte is one of the OGs. It's been around for years. And when it comes to blockchains, I talked a little bit about the importance of blockchains earlier, but there's an Ethereum blockchain, an XRP, for the sake of argument, blockchain, Bitcoin blockchain, Digibyte blockchain, right? Now, the longer they've existed, inherently, the more robust they are and the more involvement they have and all that kind of stuff. And by virtue of that, the more, you could almost
trustworthy,
the more inherent value it has, right? So even though it's low on the chart by market value, it's still a pretty legit coin that's got a lot going on. Right? Look at this chart down between March and April there, where it touches the bottom. Can you see that?
Yeah.
Kind of the A.
And then you go
to the far right, above the word watch.
Yeah.
And you see where it says 1 penny?
Yeah.
Right? So between March and April, Digibyte was worth about half a penny. It was worth 0.004 of a dollar.
Got it, yeah.
If you take at 0.004 in March, if you take 10,000 Digibyte, that's about $40.
Fair enough, yeah.
And that's 2 pizzas.
Okay. Yeah.
Right? There's a possibility in 10 years, I'm not saying Digibyte is going to be worth $20,000, but that's what happened to Bitcoin. And there's more than one technical analyst online who is talking right now. Digibyte, I think, is around 2 cents now, 2.5 cents. But there's people online legit talking about Digibyte going to $9 in this bull run.
Wow.
Right? So some point in 2021, people are talking about Digibyte going to $9.
Got it. Got it.
Now,
and these are people who know this market. They understand what's going on. People like you who watch and study the crypto world.
They're technical analysts that that don't work in fundamentals. They work in chart analysis, right? So they look at a chart like that and using, different retracements and different trend lines and whatnot, they can determine from the past what is going to happen in the future, right? Sometimes they're right, sometimes they're not.
Fair enough.
And they're
But I
saying,
mean,
but the
you
whole
wouldn't be
point of the
risking a lot of
story-
your, sorry, just saying,
The
you wouldn't
whole-
be risking a lot of your capital, Jerry, if somebody were to get it now, when it's 2 cents the coin, you could throw 50 bucks in there, 100 bucks, you know what I mean? You're not risking a lot of capital, and like, it could potentially really,
Well,
go
that's kind of the point. Like, I'm not saying I got 1 million digibytes, but I got a few. And and I don't have them for today or tomorrow. I have them
Yeah.
for, I don't have most of them. Like,
Yeah.
if it hits $9 next year, I'm going to sell some for sure, right?
Got
Why
it.
wouldn't I bought them at a third of a penny or whatever. But
Yeah.
this story that's in the email, like, how could you ever have 10,000 of something that would equal a pizza? Well, I'm showing you a popular coin that exists today where 10,000 of them in March would have equaled this exact same transaction, right? So imagine in 2030 that Digibyte is worth $10,000 or $12,000 or some crazy amount.
Yeah.
That's
Yeah.
the same kind of calculation as what's happening here. So the potential, what I like to say to people, and I said to you earlier, is that with this new asset class where we began, it's volatile. This is being created out of nowhere. A lot of the potential of what the blockchain can give us, whether it's trustless payments or it's micropayments, we don't even know yet. Half the things that the blockchain is going to give us haven't been invented. The first few years of the internet, that didn't bring us.
Functionality was limited. I get it. Yeah.
So this is, like I said earlier, this volcano crashing out of the ocean. That's what crypto is. And to have a 10,000% gain is completely possible, right?
Insane, incredible. But yeah, I have to correct you by saying that it's correct. It's created out of nothing. That's what the central banks do. They create money out of nothing. This actually, as you've explained to me in the past, first of all, when it comes to creating Bitcoin, there is all this processing power that needs to be used in order to create Bitcoin, and then the various coins and their respective blockchains bring to the table a certain functionality that makes them that brings value to the marketplace, to the overall marketplace. So it's not exactly just like literally creating value out of thin air that doesn't exist. We're talking about actually the functionality that is underpinning the values of these currencies. And of course, I would say, of course, there's speculation. There's a place that speculation plays, and oh, we think it's going to do this, therefore. So of course that would affect values. But ultimately, if it provided no value, it would not exist as a coin, right? As a digital coin. Am I correct in that, Jerry?
Yeah.
So if somebody comes up with a new coin, it has to provide some level of functionality. It has to bring something to the table. Otherwise, nobody's going to want to use that coin. And I think perhaps the more functionality, but I'm sure marketing and who's promoting it, I'm sure all of it plays into what coins end up being the most popular. And with some, we're talking about just length of time in the market, like just as you're saying with Digibyte, like it's been around for so long. I mean, anyway, you're better at explaining this than I am.
Well, I think it behooves us just to know that it's coming, right? That digital money, this new paradigm of transacting over the internet is coming, and central banks, the IMF, the Bank of International Settlements, the European Central Bank, the Federal Reserve, actually the England Central Bank of England, whatever it's called, is partnered with Ripple, right? As they are also with the Bank of Canada. So there's so much happening in the crypto space, and FIs, all these financial institutions, right? Like whether it's if it's MoneyGram or PayPal kinds of places, or it's or if it's smaller exchanges, or we're going to see banks somewhere in my deck, and maybe it was deleted somehow, but I thought I had an article from, and maybe this is it. Oh, here it is. The OCC. Can you see this?
Yeah, yeah.
The OCC is the Office of the Comptroller of the Currency in the United
Okay.
States. There's an actual person who's the boss of money, right?
Okay.
Now, what's the date on this? July 22nd. The
Yeah.
office of this office gave banks permission to hold crypto. Remember what I was saying? If it's not your keys, it's not your crypto.
Mhm.
Holding a hard wallet like a Nanner Ledger or a Trezor or something like that, or having a wallet that's on your phone, whatever that's all about,
Mhm.
still makes people nervous. If they got 50 grand or 100 grand or 200 or a million, it doesn't matter. If they've got that on a wallet and they have all these phrases they have to write out and passwords,
Yeah.
it makes people nervous, right?
Yeah.
So on those places I showed you earlier, Fidelity and Digital Assets or Grayscale, those are places that have custodialship
I understand.
of
Yeah,
your,
I get it.
so you
Yeah.
can hold your crypto there and it'll be safe, right?
Right.
What the Office of the Comptroller of the Currency now is allowing banks to do the same thing. So they're allowing the banks, now this is American, but they're allowing banks to introduce into everybody's, slate of things they've got in their online banking, there's going to be a digital wallet section now, right?
Amazing.
Where
Yeah.
I don't know what kind of interface it's going to have, if it's going to
Fair
be the
enough.
same as the digital wallets I
So you
have.
may not, yeah,
But
you may not need to remember maybe your keys. Who knows? I mean, I don't know. It's not set up yet, but I mean, that's what's in the works currently. It's coming soon, it says. Yeah. Um, that was November 2020, the update. Yeah, yeah, yeah. Payments charter is ready. More crypto banks coming soon. Okay. Yeah, so it's really just a matter of time before we see the mainstreamization of cryptos, really,
yeah,
literally.
it is happening. It's just that, and the thing about it too is, okay, this is banks are coming into it. You saw those things where all those big companies are dropping, $500
Millions,
million into
hundreds of millions.
Bitcoin.
Yeah.
We saw the last time where Ivy League schools were putting part of their endowment into crypto assets. All of this is happening. There's crypto exchanges, there's hedge funds, there's trust funds that are all being designed around crypto. They're all just coming into it now after people originally started it, right? So this is the only asset in the history of the world that didn't come from the top down, it came from the bottom up, right? And people like you and I own crypto ahead of banks. We own
Very, very
crypto
interesting.
ahead of institutions. We own crypto ahead of hedge funds. So the benefit for us, and what I've tried so hard to impart to people, is when those institutions decide to come in, good grief, it's going to change because there's just been people,
Yeah, 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 yeah,
it's all
yeah.
investors like me, retail, right?
And they're
It's
not
just,
making this big investments to lose money, or like they're making these investments because they see what's happening. They see where the money supply is going, where the current financial paradigm is going, and as you said, they're protecting their own wealth. Um, they're doing what I think many of us should be doing if we haven't already. So Jerry, I have to wrap things up. Gotta go get a little man from his school. And thank you again so much, but please put up the slide. I wanna mention everybody that if you still feel that you need some hand holding to get started with cryptos, Jerry graciously agreed to help you for a very reasonable rate that you guys can discuss. He obviously, nobody can give their time for free. So I'm sure you can understand that if you wish to get, and I'm really grateful, Jerry, that you've agreed to share your knowledge with us without a cost this time in a group format.
well, the thing is, Leticia, and because I was very glad to share time with you over coffee when we first started talking about crypto. I've tried to be somewhat of an ambassador these last couple of years with people. And part of an ambassador, but I just want people to know that this is like a remarkably easy way to to get rich. You know, if you just pay a little bit of attention, it's like, imagine if we had the chance to go back and buy Google stock before people even knew what a Google was, right? You know, when you first heard about Google, did you really feel like you needed to search anything? You know, like, I got everything I need. What do you mean I need to search stuff? But imagine buying Google stock or Apple stock when they had that 1984 commercial, right? Like when Apple was launched. This is buying Google stock when it launches. We've all heard stories of the secretary from whatever company cashing out a multimillionaire because she was there getting stock options when the company started, right? Whether it's Apple, whether it's Google, we've all heard the stories, right? And what crypto is, as a brand new asset, we're all secretaries working for the man. We buy $1,000 worth of crypto, like $1,000 of Digibyte at a third or a fourth of a penny. When it gets to $9, you know, you're buying a new suit that day.
No, we're talking about potentially life-changing money, life-changing.
Yeah, like it's, you know, just think Google stock when it was launched, Apple stock when it was launched. Like, we've heard the stories. It's the same thing.
I get it. So once again, everyone, if you, and thank you again, Jerry, so much for your time and for your insights. And I legit call you a crypto enthusiast. You really are very enthusiastic about
I
this.
know. You got to turn my mic off.
And you know what? And hey, I'm very happy for you because as one of the early adopters, you know, you did get in at the right time, like at a better time than most of us, you know. So now you're beginning to kind of really reap the rewards, at least to some extent, of some of your earlier investments, and as you should, and good for you. You were one of the pioneers, and again, but the idea is it's not too late. We're still at that infancy stage. It's not too late for all of us to get started. Any one of us who wants to get started. If you need any hand holding to get started, Jerry is willing to help you with that. Or if you have any specific questions, and again, he's going to give you his own, like, you know, Jerry, you're going to give them your honest opinion. You know, you're not a financial advisor. You made that clear. This is a new space. You know, I don't even think there are, you know, crypto financial advisors out there as of yet. You know, really, this is a new space. If you want that extra handholding, please, that's Jerry's email address. Feel free to reach out to him. We're also gonna put below the links to our previous sessions, the one that we did on buying crypto made easy. And that's all I have to say here. Anything else you want to say, Jerry?
I noticed in my little picture in the corner, I've turned into somewhat of a ghost as it's gotten darker around me. I'm sitting in this dark room now. It's kind of funny.
Yeah. Well,
I don't know if I'd really have anything to add other than to top what you said about what I can offer, right? It's a very, like, the last couple of years, more than willing to sit down with anybody. I've sat down with dozens of people, right? But as crypto's starting to take off and I need to look after it maybe a little bit more, sure, we'll make an arrangement and I'll help you out and point you in certain directions. And it's certainly something I'm not going to get rich about, but I want somebody to be, you know, I want to spend time with somebody who I know is interested, right? And if it takes a little bit of money to prove to me that, you know, then I'll buy, you know, that's all I'm asking for, because it's such an interesting topic and I can go for an easy hour or 2 hours.
As you can see, I get that. I get that. Then absolutely. So in other words, if anybody wants that coaching, hand-holding, I know you're willing to share knowledge, but you cannot be spending multiple hours per day one-on-one coaching people, right, when you've got your own investments to manage at this point, and you need to stay on top of your game. So
well, if I get hip to this though, and I can set up a Zoom thing with 5 or 6 people, I'd be glad to spend a couple hours online if everybody, like, if we've made it, you know, and we just do a thing, right? Like that's cool. It doesn't have to be like,
one-on-one.
It can be figured out depending on what people are actually looking for.
Okay.
You know, and
okay.
It's just so complicated and everything is in another. I put this little paragraph on this page because it's, you know, it's somebody that's in the space knows what all this means. But if you don't know what it means, you have to learn what everything means in order to get into the crypto space. Yeah. And it can be difficult and it can be intimidating.
Yeah.
And the time it took me and the money that I lost trying to get into it and get myself invested, you know, it's going to take a
Well,
lot of
Jerry,
time.
you're giving me an idea. You know what? Let's talk about this after the call. Not right now because I have to run. But you know, perhaps I could set up a Zoom call that I would advertise in advance for people, and there would be a cost to attend. And whoever is interested, maybe you could literally be doing, you know, how to get started with crypto. We should brainstorm about this, and I'm definitely open to promoting that, Jerry, because I definitely think there's a market for that. You could also be creating your own courses and so on. I've seen other people do that.
Well,
You don't want to, you just don't have an interest in that. No worries, I understand. But thank you for offering that. Potentially, we could set up a Zoom call. Again, I will follow up with you on that. I think I'm definitely open to promoting that. I think this is something people want to know more about. Many people out there want to know more about, and I'm grateful to know you, Jerry.
yeah.
Thanks.
Well, you know, I would even offer, you know, just to make a point that it's not about me making money, I would suggest if you want to know about crypto, as much as I hate, like I don't know anything about Facebook. I hate Facebook. I fucking hate it. And Zuckerberg can go fuck himself if you ask me. But you know, as far as sorry, what?
No, go ahead.
As far as YouTube, if you go to YouTube, vast amounts of stuff on crypto. You know, you can spend months on YouTube. There's a lot of great channels, how to do it, you know, they're not going to hold your hand. They're not going to be able to answer all your questions, but they're going to give you a lot of information to get yourself learning, right?
Cool.
So yeah, but like I said, Facebook, I don't know if it's got a crypto thing or not.
No, they don't. They don't have anything like that. No, they don't filter out crypto-related info. Not that I've seen so far. They're more focused.
They're a bunch of communist censorship
Yeah.
goofballs.
But so is YouTube, though. But
I know. But YouTube has a big community of crypto, so you have to put up. Like I don't know anywhere else that has a big crypto community. Maybe Twitter.
Probably BitChute, but I mean the same channels that
I haven't seen a crypto community on BitChute.
No, thank you for sharing. Okay. Listen, gracias. Thank you. I have to run. Thank you so much, Jerry. So you may have to actually end the session because you're the host now. And thanks everyone for watching. And again, we'll be back with our Money Matters webinars next year. Bye. Okay.